Ever wondered why the markets move in mysterious waves? What if I told you there is a hidden code behind these price movements used by top traders to catch the reversals like magic? It's called Fibonacci retracements. And trust me, once you master it, you will never look at charts the same way again. Fibonacci retracements, according to me, is one of the most powerful tools in technical analysis and the most underrated. From intraday traders to long-term investors, everyone uses it to spot key levels. But most traders either use it incorrectly or don't fully understand its potential. In this video, I'll break it down step by step, how to draw it, how to use it effectively for maximum accuracy. So welcome back, guys, to another exciting and interesting episode with me, Asha, on your favorite YouTube channel, Market Wizard, Stock Options and Futures. So before we move on, there are a couple of things that I would want you to make note of. So point number one, do make note of it. A Fibonacci retracement is always drawn in the direction of the trend. So what do I mean by it? In the direction of the trend? So let's understand. Suppose market is in an uptrend. So how will the market move? It will move in waves where you get higher highs and higher lows. So this will be how the market will move in an uptrend where you have higher highs and higher lows. When a market moves in this uptrend where it makes higher highs and higher lows, a Fibonacci retracement in an uptrend should be drawn so that you know till where the market will reverse from where you can make your buying position. So it's a buy on dips market. So now let's quickly understand, how do you draw a Fibonacci retracement? So you draw a Fibonacci retracement on the impulse wave, on the direction of the trend. So these are the impulse waves. The direction of the trend is the impulse wave. So where do you draw a Fibonacci retracement? You draw it in the direction of the trend so that you know till where it will dip and from where you can buy. So this is when you are in an uptrend. So when you are in an uptrend, you draw it in an impulse wave, point number one. Point number two, the Fibonacci retracement is drawn from the bottom to the top, from the low point to the high point. That is how you draw Fibonacci retracement in an uptrend. I hope you've made note of it. Now let's quickly understand what do you do in a downward move, in a downtrend. So how does a market typically move in a downtrend? It makes lower highs and lower lows. This is typically how a market would move in a downward trend, lower highs and lower lows. So what would you do here? You will look for sell on rise kind of a move. So when you look for sell on rise, which is the direction of the trend? This is your impulse wave. This is in the direction of the trend. This is where your impulse moves are. So when you in a downward move, in a lower high, lower low kind of a scenario, what do you look for? You look for sell on rise, correct? This is what you look for, a sell on rise. So your corrective move is giving you that sell on rise. That is giving you the rise. This is your corrective move. These are your corrective moves. These are your corrective moves. Correct? These are your corrective moves. So what do you look for out here? You look for a selling opportunity. You look for a sell on rise opportunity. And how do you draw your Fibonacci retracement in these cases? You draw it in the direction of the trend. Matlab, you draw it from the high price to the low price. That's how you draw your Fibonacci retracement. So two major differences. In an upward trend, you draw your Fibonacci retracement from the low price to the high price. And in a sell on rise market, you draw your Fibonacci retracement from the high price to the low price so that you know where do you make your selling position in a sell on rise market. So let's quickly look at examples. So the first chart I have here is a crude oil chart. So as you can see here, the chart clearly tells you it is a downward trend market. Now let's move on and see our hourly chart to make a trade, intraday trade. To get an intraday trade, let's look at an hourly chart. Hourly chart also clearly says it's a sell on rise market. So now if I have to draw a Fibonacci retracement, I'll have to draw it on the impulse wave. So where is an impulse wave? This is an impulse wave. And this is the corrective wave. Now, let's make a couple of tweaks on our Fibonacci retracement. I don't need all the ratios that are there. I only need key ratios. So if the market is highly bullish or highly bearish, the first point of reversal will be 0.382. So if it's highly bullish or highly bearish, this will be the first point from where the market will reverse. Now, the second important point from where the market will reverse will be the 0.5 ratio. This is also an important Gann ratio. 50% is also an important Gann ratio. Then the next important ratio from where the market will reverse is 0.618. This is called the golden ratio. So from here, the market will reverse if the trend is going to continue in the downward side. So there are three key point numbers that I have, which is 0.382, which is highly bullish or bearish. It will reverse from 0.382. 0.5 is an important Gann number. It should reverse from there to continue the trend. 0.618 is the major level from where it will reverse. So these are the key points that I've marked out here on my chart. So once I mark those levels, you can see in this downward trend how the market is moved. So the first level of 0.382, obviously it took rejection there. The second level of 0.5, you saw how it took rejection there. And 0.618, you saw how it took rejection there. Now, when you see these levels, do you blindly go and take a trade? No. You look for very important reversal patterns that happen on the chart. So you can either look for a doji, you can look for a engulfing candle, you can look for a piercing pattern. So you can see here you have a doji, you have an engulfing pattern that is formed. If you go on to a 15-minute time frame or a 5-minute time frame, you can see you can see a doji formation out here. The lows breached, a very small stop loss, you take your trades. This is how you initiate your trade when you draw your Fibonacci retracement. Now let's quickly look at, say, Nifty chart in the recent move that happened. Let's look at Nifty chart. Before we move on, let me also show you an important, since we are on Nifty chart, let me also show you an important, reversal point that happened today in Nifty. So today's reversal, how do you catch today's reversal? So Nifty has been in a downward trend. So if you draw the Fibonacci retracement from the high point to the low point, you can just see how the magic works. Just see the important Fibonacci retracement level, 0.382. That is 22,666 is the level from where market reversed today. So this is how you can look at the key Fibonacci retracement levels and use it in your trading. So you can see how this is a live example of how this Fibonacci retracement worked. Now let's quickly also show you an upward trending market. So let me take another example of an upward trending market. Now, this is the chart of Chambal fertilizer. You can see that Chambal fertilizer is in an upward move. Now, suppose I have to see which is the key level from where Chambal fertilizer has a probability of reversal. So this, you can see how beautifully Chambal fertilizer has reversed from the 0.382 odd levels and then breached and taken out the upward trend. Now, the next high is here. Now, the next point for you to look out for is, the next reversal point for you to look out for is, again, if it comes back to 540 odd levels, this could be a good level for us to make an entry or take an entry in Chambal fertilizer. Again, not blindly looking at the reversal patterns. So I hope this was very interesting and very, was an eye opener for you on how to draw the Fibonacci levels and how to trade based on the Fibonacci levels. So I hope this will give you an edge to your trading. So happy learning, guys, and do share, like, and comment on this particular video on Fibonacci retracement. We will do more such learning videos on our channel. So keep following us. Like, comment, and let us know. And for all our non-speak in English speaking viewers, we will do a live webinar so that we can, cover all your doubts, questions, everything on Fibonacci retracements. So see you soon in our next video.